along, ladies and gentlemen. I'm Hiral Datia. We have with us Peter Mcguire, CEO at XM Australia, joining in. Welcome to the show, Peter, and always a pleasure to speak to you and get insights from you. Peter, everyone right now is talking about a busy week. We have four central banks, who will be meeting, and I think it's the FOMC, which is the most crucial. What's your expectation? Because we've already seen a 75 basis point rate hike in the July meeting. And clearly, the indication that was given that time was that we will start going slow with the pace. So, what do you make of it?
Well, Hiral, it's lovely to join you, and thank you again for the invitation. It's always a pleasure to, say hello from Sydney to my dear friends in India. It's such an interesting week, as you mentioned, the FOMC, but also, those four central banks, Switzerland, you've got the Bank of England, Bank of Japan, you've got the US, all looking at rate rises. You've also got, and I may have made just a bit of a slip on that, but there are 19 central banks this week looking at rate rises and talking. So we're going to see a lot of decisions spanning from South America all the way through Asia into Africa, and that covers pretty much the whole globe. And as we mentioned, Switzerland. But how the FOMC? Well, they're saying, as you rightly know, they were thinking that we might be able to tail it back, but that doesn't seem to be the case. They're chasing inflation and chasing it hard. You've now got about 30% of analysts. It was, who would have thought going back 2 weeks ago you would have had any chance of 100 basis points? And I'm erring on that side. I think if I'm going to jump in a camp, I'm going to say it's going to be 100 basis points. I'm going to be right or wrong. But I think that I won't be surprised to see 100 basis points in that meeting. And the uncertainty is great because the inflation story is galloping and it's hard to rein in. And we always worry naturally about stagflation and the overall themes entering and exiting markets. And, it's a wild time. King dollar currencies are being crushed. We've got gold crushed. Equity markets incredibly volatile, and it's just an incredible time to be trading, Hiral.
Right. So Peter, what are markets pricing in? Because everyone is saying, at least the last commentary that we heard was that the rate should be above 4% somewhere. What are markets pricing in for the coming meeting?
Well, if that's okay to have a headline, I just want to use an example because it's a pretty crude example, but it's reality. Turkey's inflation rate is 80%, 80, and that was, I heard that going back a couple of weeks ago, so it could be higher than that. And over the weekend, I had some news come across my desk. Argentina, its inflation rate is 100%. And they've got a cash rate of 75%. So for the people out there, you're hearing me right, 100% inflation in Argentina. So it's all about reining that in. And it's okay to say, well, 4% is going to be the number, but that's if inflation can be edged back or pulled back because it's galloping. And that seems to be the major concern at the moment, Hiral. How much more legs does it have? Is it a wild bronco and you're trying to pull it back, or a raging elephant down a beach, or is it a wounded beast that you feel as though that you're going to get you shot it and you're going to get it pulled up in the next probably 100 meters? That's the issue, and I think everyone's erring on the side that maybe it's a wild beast and they haven't been able to contain it yet.
Absolutely. And with all of this said and done, how spoil sport is inflation? As we just mentioned about it, any which ways, the CPI that came in last week was disappointing. Now, taking the inflation aspect into consideration as well, how are you expecting the dollar to react?
Well, it seems to be the best of a bad bunch. And I made reference to that last time we spoke, King dollar. And it hasn't disappointed. We're now at just on about 110 for the US dollar index. It's the market that I look at first. When I wake up in the morning, I just go straight to the phone. I don't sleep with the phone because they're annoying to do that, and I try and sleep very well. But when I get up and I look at the markets, first thing, US dollar index. What did it do? That tells me, that sets my day. I go, well, the dollar's up. So what happened to currencies? What happened to commodities? What happened to the equities? And then I cast my eye across it. Yen's been crushed. We're now at 143, 144. It was nearly at 145 in the last few days. Pound back at that 114, 115 level. Euro at parity or 99 point something. So everyone that I talk to, pound, the new headline number, 110 to 112 for the pound, 147 to 150 for the yen, and 97 to 98.5 for the euro. Now, that's what analysts are saying to me. That's the news that I hear across the broad spectrum of people that I talk to, things that I read, articles, and general conversation. So that's what worries me. That dollar just seems to have so much horsepower, and it really is. It's the only game in town at the moment.
Right. So that's with regards to, what the central banks are expected to do, how the currency is going to move. However, when you look at in terms of where crude is concerned, a lot of developments, Peter, coming in terms of where crude goes, because clearly if you have to see the November, for November, we've seen somewhere in that 91, $92 kind of a range right now. Plus you have the OPEC plus, which has fallen short in terms of the oil production target by almost around 3.5 million barrels in the month of August. What would that mean for crude?
I would have thought that crude would have come back from these highs, but it doesn't seem to be. There seems to be a strong appetite from producers that they want higher prices, not lower. There seems to be a relationship building. If I've followed this for a long time, the crude market, and I put my mind back to 86 when I saw one of the tankers hit in the Strait of Hormuz. And, the oil market is such a dynamic market. And at the moment, there seems to be an alignment, a very strong relationship between China, Russia, and Saudi, and what's happening with payments for crude, rubles, yuan, probably going to be gold, probably Bitcoin as well. So all of these factors are going to, I think, present themselves in the market. And there just seems to be, I'm not saying a changing of the guard, but if anything, the heavyweights of OPEC seem to be banding together. And they're banding together and with China. And I think it's going to be higher prices. I don't like to think it is, but I feel that groundswell coming. You've got a midterm election, get through that in 50 days. We've got worries about gas and energy heating Europe in the winter. And I really think that unfortunately we're going to see higher prices, and that's not going to be a good thing for inflation.
Right. And then coming to natural gas as well, we did see a good run, Peter, in terms of natural gas. However, we've not really held to that advance, and we've started to see a revision happening on that front, and natural gas has started to drift lower. Do you think this is the kind of momentum that we will expect to see from here on? Or do you think there is a bullish momentum associated to it for which we need to hit a bottom and then see a reversal again?
Well, I'm looking here. I mean, it's at $7.85 for that NYMEX nat gas, and it's been incredibly volatile, up to $9.40. I think I put my mind back to whipsawing, really big volatility swings. And I wouldn't be surprised to see it edge back a little bit from here, but then I think it'll take off again over that October. You haven't had any weather outages, so if you see any conditions as far as hurricanes in that US basin, what impact that has to supply, and this is the time of year that you get them. I mean, this is really, it's coming into that sweet spot. Then you've got the next part of it, of course, demand picking up with colder winter, and those conditions are not going to be favorable for price. So I think the draw on nat gas and the price of it will probably again have some upside. So I think if you're a producer, you'll do well. But if you're a consumer, mum and dad, and that might be the Christmas present this year, trying to keep the house hot.
Right. And my last question coming to you, Peter, is in terms of base metals. Do you see doom in terms of base metals as well, where we don't really see any major direction, but there is going to be weakness that will continue?
Well, the weakness will continue because you've got to worry about industrial demand. You've got to worry about those big economies that have so much demand for base metals, and everything really points down to China. You've had iron ore prices collapse from those highs that we experienced, and now they're certainly significantly softer. I'm just looking here. I mean, when you're looking at copper's been spanked down. It's 7,700 a metric ton. It's very, very soft. Tin the same, aluminium the same, zinc the same. They've all been, turned on their head. And those glory days that they experienced over the last year or so certainly aren't there now. So you've got to have strong demand. You've got a Chinese property market that's having a lot of problems. And I don't know how much of a contagion that's going to be when it unwinds, but you know as well as I do, someone somewhere, someone's equity is another person's debt, and you're going to pay for that debt. And the Chinese property market has got plenty of debt. So someone somewhere is holding that debt, and that's either domestic banks in China or international banks. And I've done a little bit of study on it. I'm not saying I'm an expert, but I understand the contagion effects as far as banking. When things unwind, they unwind brutal. And the situation with the Chinese property market, I think it's a $62 trillion business. And that's what it represents, about 32% of the total Chinese economy. So they need, the storyline is they need base metals to build. They need concrete, they need steel, they need copper, they need aluminium, they need probably some tin, and all of those inputs going into construction. And so if it's softer, then that's not a sign to really rally base metals. And that's where I just think they've been punched down. And you've got to see some true direction over probably the next, 6 to 18 months to give us a good indication of what's ahead of us, Haral.
Absolutely, Peter. I think well-made points right now. This week is also crucial in terms of what happens and what comes out of the 4 central bank meetings, especially the FOMC. That's going to be crucial because that is something which will provide a lot of direction to the commodities market overall as well. But thank you so much for joining us on the show. It's always a pleasure to speak to you, get insights from you. Thank you. Stay safe and speak to you soon again.
Thank you, Haral, and to everyone.
Thank you so much. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.